Hey you guys, welcome back. Hope you had a good week. 3/11. That's today's date. We're gonna look at a little bit of SPY, some GameStop, little TA, some technical analysis, what I think's coming, and then some good DD that was shared on Reddit that I will briefly look at. Sub up, like up, comment down. Happy Money sticks around. We have a Twitter you can follow us on at HappyMoneyYT, as well as a Discord server. Link for both those are in the description. And free to join. We're actually looking for someone that has a login to, I don't know, some website for Gex and Dix data. So always collaborating with great minds in there. Looks like GME's popping here. We got 50 minutes left. Market kind of coming down today, down 0.60, 0.5% basically. Gapped up this morning on, what was it even the news? I can't remember. Something kind of bullish. And then some data came out during the day that was also more bearish. Pretty weak overall. We still have a bullish MACD on it on the hourly here. We have lower highs. There's a lower highs and then higher lows. So it looks like it's kind of just consolidating. On the daily, it is still bearish though, so might make another big leg down here soon. And see what happens at that 410 support, see if it keeps coming down. Speaking of the Gex and Dix, the Gex, let's see, Gex is gamma exposure, and then Dix is dark pool exchange. And it was crazy looking at the data for right here when the market had the biggest move it's ever in history. It's ever had in history. And we kind of see that on this chart. So here it is. I won't spend much time on this or explain this. There's a Wall Street Bets post explaining it, just briefly how it works. We kind of know how it works through some options, but I liked hearing his overview. But yeah, right here is where that huge drop was. And this, without even knowing what it is, you can see this is way down here on the Gex. It's the yellow line. That's the lowest it's been forever in this chart. And this chart goes back to 2011. So at this point, basically, to me, it seems like on that January 20th, is that what that was? Yeah, January 20th, the market was basically about to just fully collapse. And that was this day right here. And then 2 days later, I mean, it was unstoppable until 2 days later, that PPT, plunge protection team, ripped it up and gave us the biggest move ever in market history. Unless that was this day. I don't know, but this was a big rebound. It seemed like right here from that data that it was not going to stop. Some sort of intervention. Maybe it was this day that the PPT was. No, I think it was that day. Anyways, looks like it's going to keep coming down. Let's see. GameStop also, like I was saying yesterday, TA is all looking bearish on it for the short term as well as the long term. If we are at the end of this trough, though, I don't expect it to break these lows. If it breaks below that 86.29, very much, I'm going to say this is a different pattern and we're not at the end of a trough. So historically, we've always been shorted into earnings or right after earnings. Here's earnings next Thursday. We'll see this time around, because if this is the end of the trough, earnings will be basically right at the very beginning of the bull run, which could be significant because we might be having that also from the news of earnings, of what's announced, what's released, good numbers, etc. But I do think this will probably keep coming down, maybe early into next week before we turn around. Might come down a little more. Came pretty low today, but might see the high 80s. We'll see. Might see high 80s before it turns around. Nothing on the chart here has turned bearish or bullish yet. No divergences to speak of. But we'll see how it develops. I did have some put debit spreads on it that I closed out. The spreads are just so wide. I can't even hardly make money. You're basically just paying market makers. It's stupid. In our short put, I'd probably be rolling. I think it'll close out of the money though. It's a 95 strike. Here's what we did today. I had short call on RKT. After the dividend, I figured it'd come down, so that worked out nice. Short call on IRNT. This was basically legging into a long call, putting into kind of a poor man's covered call. Same with the Wish, poor man's covered call, bought to close those. Same with this GME. I don't know why I did that. This expires today. It'll be worthless. And here's the put debit spread with the crazy spreads. So didn't open any new positions. I don't really have any buying power. GME this low, I have no margin buying power, even though I'm not buying anything on margin. I don't know. Their margin requirements might be over 100% right now on GameStop. I'm not sure. I think as it comes down, they keep upping the percentage or something. Clove is still doing good. We have the covered call on that expires today, so I'm gonna have to figure out that because that's a 3 strike and it's at 3095. So see about that. Birds has earnings next week, of course, as well as GME. Tesla or bearish play on that's working out. Most of their stuff isn't working on here. And then on our long term, that short put the 95, so it's kind of swinging around a little bit. It expires today, so I was trying to buy to close for a minimum, but it's come down so much I might just have to end up rolling it. If I do, I'll probably roll for a 20 delta for next Friday on this one, just in case we don't get a bounce next week and it kind of keeps coming down. And that's how I'll play that for now. And if if SPY really does kind of crash next week or so, I do think GME could break through some supports here before it squeezes. So that would bring it down below this 86. And if the market is crashing, I don't see why this would necessarily hold up, because everything will be coming down. Hard to know how far it'll come down. Next support I really see is like 45.50. It could happen. I'm not expecting it to, but just as a heads up for that. On Discord, I shared some good reads. One was the smoking gun. This was by Adabit. That's right, Adabit. Here's a proof we lied to. The numbers don't add up. Shorts did not cover during January, and I still don't see how they could have. Read this fully and tell me I'm wrong. Yeah, this is kind of just a reiteration, but it is a good read. I think if I can give you just like a TLDR on it, other than that. I read all these like in the middle of the night. I like wake up and just start reading stuff, so sometimes I forget it. I don't really remember. Oh, remember this chart? This was from, I think, the SEC. Gave us this chart. Yeah, I can't really remember that one, but that one's good from Adabit. This one from Kusavals. Support of theory that we didn't see an OPEX rip due to failed margin. We've talked about this before, and basically the cycle that we've seen with the run-ups and the pinches, those are just signs that they're kicking the can and they're still in their position. Once that stops before a squeeze happens, that means a squeeze is probably about to come because, yeah, failed margin call, and that they're basically having to set up to close or cover, in my opinion. So possibly the biggest drop then will happen as well. That's where we could see the 40, or maybe we're already at it. But if we're breaking the cycle, that's honestly the bullish for the squeeze being sooner rather than later. What did this one bring up? Oh, this one. This actually kind of is interesting, kind of his analysis. He goes into when Citadel started tweeting and all that crazy stuff, and it basically, his point is people were probably pulling a lot of money out of Citadel, and they could have been margin called already, and it takes, I don't know, 2 months, 3 months for that to actually play out. So that's where we can see it now, because that was back, I think that was 2 months ago. Here's the TLDR. Not a problem. But it's not going to steal the Let's see. Yeah, that's not really TLDR. But anyways, yeah, this is kind of interesting because we're not going to know when someone's really necessarily margin called. We'll know later, just like 2008 and stuff. After everything had already happened, that's when you started to hear about it in the media and stuff, like stuff that had happened months ago or even maybe a year ago. By the time you hear about it, it's oftentimes long in the past. It's already happened. This is interesting. A lot of bullishness for this earnings and any announcements. This one we've also talked about, the GameStop Entertainment and kind of GameStop having a spin-off company for their NFT marketplace, which is probably the best thing to do instead of trying to have it all under the same. Well, this would also probably make a new public company, so new ticker, which would also recall all the shorts on GME, which would be probably the biggest thing that it would do, but it would also make a separate entity for kind of this other NFT business, which this shows kind of, I guess, proof behind why that might be the case. Here's one thing. Ryan Cohen gave us a bit of a hint in his Be Better strategy by suggesting they should do the same with the retail. So yeah, he can't really probably talk about GameStop, but it's possible what he was saying to BBBY is basically what he's going to do on GameStop and have a separate business, kind of how he's saying on BBBY with Baby. Including merger. Oh, is this the one? No, this isn't the one. There was one called the really bullish. So basically, there's another DD I looked at that was talking about why this earnings is so bullish. So they moved it back, right? So it's much earlier, which is bullish. 10 days they gave a heads up, which is the least amount of time they can do if they offer a dividend. It's also on his dad's birthday, who passed away. His tweet about the apple not falling far from the tree, an homage to his father potentially. We'll see. I'm pretty hyped for all that, and the fact that we actually haven't started to run, and they've even today in the last few days we've seen a concentrated effort to bring GME down, where sometimes it'll come down with the SPY and kind of move around and just low volume nothing, but we'll see, like this right here, volume pickup and just dumps and price spoofing and using options and whatever, and it's concentrated effort. To me, that's what it looks like, at least. So to me, I think it's looking like they're preparing for earnings to start a squeeze of some sort, or bullish news to have pressure where they're trying to basically suppress it. Because the further we go down, the closer we get to earnings. I mean, we'll see. I could be wrong. It could just be like right here where they dropped it a bunch before earnings, then they shorted it way after earnings, which they've done in the past for sure. Every earnings they've shorted after. But this one's different because they didn't really cover any exposure from all this huge drop. Every other earnings, they had a big run up first, which is what we were expecting, right? Here, and they didn't this time. They had a little one here, but it wasn't nearly the exposure I think that they needed to cover. So I'm thinking this could be the final dip, honestly. Whew. That's what I got. I've got options for it. They're so in the hole. It's hard to even average down. I don't really have any money to average down anyways, but yeah. My short put, I'll probably need to roll again if I can trade that out during the day. That's what I'll be doing for shares if we start ripping. And that's my strategy. Jump on our Discord to come discuss why you think I'm wrong. Okay, peace out. Oh, have a good weekend. Happy Friday. Take time off. Go outside. The sun shines sometimes. Peace out.